Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, 3rd day of September 2020, and this is the daily report for gold and silver. Although not nearly as brutal as yesterday's downside action in the precious metals, with the exception of palladium, all of the futures metals did close lower on the day. Silver sustained the greatest percentage drawdown. The key is this occurred in conjunction with a U.S. equities markets that sold off dramatically after hitting new all-time record highs yesterday. The Dow was the exception. It didn't go to a new record high. However, it sold off by 800 points on the close, 1,000 points at its low. Let's take a look at current pricing, and then we'll look at our technical studies. With the exception of palladium, all of the precious metals traded on the futures exchange did close lower. This in unison with a equities market that pretty much fell out of bed. The Dow Jones Industrial Average lost 1,000 points at its low, closing down about 800 points. First to gold. December contract 1937.40. Putting it down $7.30, about 0.4% in terms of the decline. But the largest drawdown today in percentage was silver, which lost 2.32%, currently tracked at 26.76. Palladium, as I said, was the only precious metal to escape the decline today. 2340.30. It is an industrial metal, but it seemed to be oblivious to the moves to the downside, especially in the NASDAQ composite, which sustained the largest percentage drawdown. When we take a look at the indices, we can see that the Dow lost about 800 points in trading today, but the big loser was a 5% decline in the NASDAQ, 11,458. Now, this occurred with basically a neutral dollar, and luckily, we are flat with no active trades right now in gold or silver. It's all going to be about tomorrow's jobs report for where gold goes after the extended 3-day weekend that will start on Friday afternoon. Let's take a look at our current technical studies. So traders, the first chart that I do want to look at is a simple line chart with gold on the top and the dollar on the bottom. And what is noteworthy is we've seen this little hook up here in the dollar, meaning that is gain ground. At the same time, we've seen this market kind of hook down. It's the first time we've seen this in quite some time, really since about the middle of April, and is absolutely worth noting. We are looking at a daily gold chart, and we have been talking about really the most important aspect in terms of what we're witnessing, and that is absolutely a compression of range. We've had these series of higher lows coming into the market. We've also had a series of lower highs. With the exception of this candle here, we stayed right within that framework. Now, today, we had a low that went below this critical support line. However, it did close right at it, and I am still looking in terms of a key level of support to be sitting around $1,900 per ounce. We're at about 39. The only other place that we could see some support come in, and I think it's the first level we want to watch, is what we talked about 3 weeks ago, and that was 1920. That's right in this area. So we're not that far from either of them. For right now, my recommendation is to maintain our neutral stance. Tomorrow's jobs report, that could, of course, take the metals dramatically higher. They could also take them dramatically lower, and it's based on a number that we do not know. And it is for that reason that I think the most prudent move is to remain neutral. And traders, we are looking at the December contract of silver right now. That is currently at 26.77. Same formation that we have been identifying in gold, which is a compression of range. We can certainly see a series of higher lows on the bottom. On the top, a series of lower highs here and here. However, the key difference is that today we had a defined break below that support line and a close below that support trend line, which tells me that the most likely area to look for support if we continue to see a decline would be roughly 25.60. That is the 23% retracement from the long data set that incorporates the entire rally in which we saw silver move from under 11 to almost $30 per ounce. After pulling small profits yesterday, getting out of all of our trades, my recommendation is to continue to have a neutral stance at least until the jobs report numbers come out. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review just prior to Labor Day weekend. Have a great day. Bye-bye.